One of the most important aspects of stock analysis is to be able to analyze the income statement effectively. In this video, I'm going to share with you everything that you need to know about performing income statement analysis for stocks. We'll get into vertical analysis, horizontal analysis, as well as some pro tips that are going to allow you to take your investing game to the next level. Okay, so before we get into how it is that you can analyze the income statement for stocks, one of the most important things that you can do is to get the income statement in the first place. For this, what I recommend that you do is to use Sheets so that you can get it right on your Excel or Google Sheet spreadsheet, but you can also get it from many other sources like other websites and whatnot. In this case, we're going to do this for Apple. So I'm going to enter Apple, select the appropriate company. And in this case, it's going to be very simple. You have the option to select annual data or quarterly data. What you will find out is that it's very similar to analyze the income statement for stocks on an annual basis as it is on a quarterly basis. It's basically the same principles apply. In this case, we're going to get annual data because this is the most common way of analyzing the income statement. After that, so you can click on get data. And right away, what's going to happen is that you're going to get the financial growth metrics, key metrics, cash flow statement, balance sheet, and income statement. In this case, we're only interested in the income statement for now. And so what we're going to do now is we're going to talk about the income statement items, how they relate to each other, and the structure that the income statement follows. After that, we're going to get into how it is that you can practically analyze the income statement for all the different stocks that you're interested in. Okay, so regardless of which statement metric you get, whether you get the one from Sheets or another website or the company itself, what matters is that the structure for the income statement is always the same. And generally, the information that's included is what's highlighted right now on the screen. So at the very top, we have the revenue, also known as the top line. This is how much money the company generated from its operation. And in this case, it is on a historical basis. So you can see how this has changed over time. After that, we have the cost of revenue and the gross profit. So the cost of revenue is basically the cost that the company had to pay off in order to be able to generate this revenue. And the way that you do that, it really depends on the account and the type of business that you're analyzing. But in this case for Apple, it really has to do with the cost of production for generating its products and services. Then after that, you have a whole bunch of other different expenses. So in this case, we have research and development. That is money that is spent by the company investing in new innovations and whatnot. Then we have the selling, general, and admin expenses. This is paying for the company's management and some of the company's employees as well. So this is pretty important. Altogether with these other expenses, that makes the operating expenses. And then we have some other stuff. So we have the interest expense. This is an expense based on any debt and interest that the company has to pay off. Depreciation and amortization. So if a company has different assets, like a building, for example, you're eligible to depreciate that asset over a period of time. So that way, when it comes down to replacing that asset, you're supposed to have already put away that money so that you can go ahead and continue with the business operations. You also have obviously your taxes, which is an expense that needs to be paid to the government for operating the business in whatever jurisdiction the business is registered in. So the equation for the income statement is super simple. You take the revenue, and that is one of the most important numbers, and then you subtract all the other costs that come with that. And after you take the revenue, subtract all the different costs and all the different categories, then at the end of the day, you have the net income. The net income, that is the profit that the business generated during that period of time. It is also known as the profit. So now that you know the structure, we talk about the top line being the revenue, the net income or profit, that is also the bottom line. That's also referred to as the bottom line. And once you have this number, then what happens is that you can create a whole bunch of different metrics based on these numbers. So one of them, which is very commonly used, is the EPS or earnings per share. This basically means that you take the net income and you divide it by the weighted average shares outstanding, or the diluted number in order to see how much money is the business making in profit on a per share basis. And the reason why you may want to look at this number is because when you buy a stock, you're not buying the whole company, like these are the results for Apple as a whole, but instead you're buying shares of that company. So this gives you a good idea of what you're getting for the price that you're paying on a per share basis. Now that you know the structure of the net income and how this all works, now we're gonna get into how it is that you can effectively analyze the income statement for any stock that you like. Okay, so there's two different techniques and strategies for analyzing the income statement of a company. So in this case, I'm gonna show you the first one, which is vertical statement analysis, and then I'm gonna show you the other one, which is the horizontal income statement analysis. So what we went ahead and did in this case, we set up this spreadsheet, and basically the way it works is that we basically copy pasted all these different values into here. And now the cool thing about this is that using a tool like YSheets, rather than getting all the stock data at once, you can set it up so that you can only get the data that you're looking for. So in this case, we have 2 years, 2022 and 2021 in terms of yearly data. And using the WISE function, you can see right now how this template is set up, where it gets the data for Apple. In this case, we're looking for the revenue, and it gets it for 2022. So if I click enter, you will see how this would load, and all the other data works the same. So the cool thing about this template for vertical analysis is that you can simply change the company ticker and everything updates for you. I'm gonna leave a link in the description of the video so you can access this template for free. Only thing you have to know is obviously you need a YSheet subscription to dynamically get the data. But with that being out of the way, now I wanna show you how vertical analysis works. So the way that it works is very simple. You get the data for one particular year, and usually what happens is that people compare it with other companies, or they can also compare it with other different periods of time. So in this case, we're comparing 2022 versus 2021. You can really do it either way. In this case, I'm going to do it on a yearly basis. So all you need to do is this. What you do is you get the amounts and you look at the amounts as a percentage of the top line, which is the revenue. So in this case, the revenue is 100% of the revenue, right? So you see this calculation right here. And now you look at the cost of revenue, you see that the cost of revenue corresponds to about 56% of the company's revenue. So you're looking on a ratio basis to look and analyze how a particular company is doing. In this case, the research and development, that's 6.6%. And you can also look at some of the other expenses. And with this information, you can look at like I said before, some other companies so that you can compare the ratios and whether or not that might lead to better or worse performance for that particular company in the future. Or you can also look at previous years. So in this case, we find that Apple is becoming more efficient in terms of its cost of revenues. You can see this, which can also lead to a higher margins for the company in terms of profits. In this case, the gross profit, yeah, we see this as well. We also see that the research and development increased a little bit. And you can also see in this case a little bit of a decrease in the net income percentage of the company, or the net income ratio. So as you can see, this is a very simple way to be able to analyze companies vertically and see what is happening in terms of different items as a percentage of revenue, either over time or compared to other companies as well. The last type of analysis that we mentioned that we will discuss is horizontal analysis. So vertical analysis looks at the numbers like this, right? This is why it's called vertical, because you look at everything as a percentage of revenue. Now, on the other hand, horizontal analysis focuses on the opposite, which is the horizontal side. And that basically means what are the trends of the numbers over time. So one key formula that you need to know is the percentage change formula. What you would do is you take the most recent value, and then in brackets, if you remember your BEDMAS, what you're gonna do is you're gonna take the previous value, so that way you calculate the difference between the two values, and you divide that by the previous value. So in this way, you're gonna get the percentage difference, and this is the number that you're gonna be analyzing. So we're gonna round it to 2 decimals, and with this formula, the cool thing is that you can drag it across, and as you can see how the revenue in this case has changed over time. So in this case, we can see that from here to here, it was was negative, here there was positive growth, and you can get a good idea of how the numbers have changed over time. I'm going to put this in bold so that way you could see it better. And the cool thing about this is that just like with vertical analysis, you can set up a template using the WISE function so you can get the data automatically. And I also want to share with you how it is that you can do this for another variable. So in this case, we're going to be looking now at the net income of the company. Zoom in and we can see the numbers right here. So now what we're going to do is we're going to use the same formula. So we take the latest minus the previous value, divided by the previous value, get the percentage to 2 decimal places, bolded, and now we can just drag this across, and there you go. Now we can see how, for example, in this case, the net income has changed over time. So in this case, there was positive growth, positive, negative, positive, positive, positive. If you were looking to do a DCF or anything like that, this is helpful to know how the trend is going to look in the future. Now, those are not the only factors that you need to take into account, because there's might be some operational decisions that are really important and will really determine this, but this is good to get an idea. So if I was looking, in this case, I'm looking at 1, 2, 3, 4, 5, 6 years. I could also do an average. And this is data that I may or may not consider when I'm doing some type of projection on Apple in this case. As I mentioned before, these methods work on any company that you're analyzing. Okay, so now that you know there's 2 different strategies for analyzing the income statement for stocks, now what I want to do is I want to show you how you put this into actual practice. So in this case, we set up this template that gets the data using WISE functions again, so you can see how the data is being pulled up. And the cool thing about this template is that it allows you to compare companies side to side, so we can go ahead and change the company, but in this case we'll leave it like this. So we're looking at 2 very similar companies, Pepsi and Coca-Cola, and now we can go ahead, do some digging, and find out what the best company is just purely based on the income statement results. So right away, one thing that stands out is the fact that Pepsi makes a lot more money than Coke. In fact, we can calculate this. So you would take the revenue here divided by the revenue by Coke, and you can see that Pepsi is making about 13 times more revenue than Coke, which is very impressive. The other thing that stands out is from a gross profit ratio, Pepsi has a higher margin, meaning it's more profitable just based on the cost of revenue, which is again something that I did not anticipate, but quite interesting to analyze. One more thing is the operating income ratio. It's higher for Pepsi than for Coke. The net income, this is where things can get quite interesting right here. So we can also see that Pepsi makes a lot more net income than Coca-Cola. So we take the net income from Pepsi divided by that of Coke, and then we get that Pepsi makes about 20 times more net income than Coca-Cola. Again, impressive. This is not something that I was expecting. This is something interesting as well. We can see that the companies have different ratios as well in terms of net profit margin. So we can see that Pepsi is dominating here as well. So overall, if we were just to look at the numbers that are presented right now, we could conclude that it looks like Pepsi is doing a lot of really good stuff. I mean, obviously Coke probably has the better brand, but in terms of pure financial results, this is really impressive from Pepsi. And if I was looking into these companies, I would highly do more research into Pepsi to see what is going on, what is the difference that's causing these results versus Coke results, and I might be potentially interested in investing. Now you know how to analyze the income statement for stocks like a professional, so go ahead, put this knowledge to good use and start reaping those rewards. If you've enjoyed this video, make sure to subscribe and turn on the notifications on, so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.